Now we're going to move on and talk about employment and self-employment taxes. So these are the taxes that are based on salary and wages or net earnings from self-employment that relate to Social Security and Medicare. So you may be familiar with seeing these in your own paychecks in the past. Social Security is the basic pension coverage for retired and disabled people. Medicare is medical costs for qualifying individuals. Employment taxes like Social Security and Medicare are not deductible on the tax return. The party responsible for paying the tax and the tax base depends on whether the person is an employee or self-employed. I'm just going to jot down here that the Social Security tax is 12.4% and the Medicare tax is 2.9%. And that's 2.9% up to, I'm going to say on up to 200,000 in income. That's for a single person. And then it's 3.8% in excess of that. Okay, and maybe if I flip back to the Social Security, we can talk about that for a second. It's 12.4% on the tax base up to $128,400 in income. Okay, so you can kind of keep those separate in your mind. We're first going to think about employment taxes. Okay, so the employer pays a portion and the employee pays a portion. So this is what I was talking about a minute ago. Social Security for the employer's portion, and sometimes you'll see this abbreviated just employer, ER, is 6.2% on the first $128,400 of salary. Down here in the employee's version, which is sometimes abbreviated just EE, it's the other 6.2% on the first $128,400 in salary. So that's where the 12.4% comes from. It's the 6.2 on the employer's behalf and the 6.2 that's the employee's portion. In terms of the Medicare, it's 1.45% on all salary and wages. That's what the employer is going to pay. And then the employee's share can change depending on what the salary is. It's 1.45% on the first $200,000 of salary. This is for a single person. And then it goes up on the salary or wages over $200,000. So there's an additional 2.35, which is where the 3.8 comes from that we talked about up here. These have changed over time. In 2011 and 12, this was cut, the 6.2% was cut to 4.2% to stimulate the economy and increase take-home pay, but we've kind of reversed back and have that increased rate again. And then just to be clear on this portion down here of Medicare, there is no cap on that. So you may just want to jot in no cap on that amount. If your salary is very high, you're going to be paying this percentage on the entire amount. All right, we're going to look at a couple of examples. First, we have Dawn. Dawn's salary is $180,000. How much does Dawn pay in employment taxes, and how much does her employer pay? So I'm going to have Dawn here, and then I'm going to have her employer. So that's my ER. We have the Social Security component and we have the Medicare component. So the Social Security component for Dawn is 6.2% times up to $128,400, and she does make more than that. So it's capped at $128,400, which means her Social Security component is $7,960.80. For the Medicare portion, it's on the entire amount. She doesn't make so much that she has the higher rate, so it's 1.45% times the full $180,000, which is $2,610. Her total in employment tax is the sum of those two, $10,570.89. The employer's calculation is the same. So the Social Security, I'm going to just put same. The Medicare is the same because she's not over the threshold. If she were over that 200,000 threshold, she would pay a higher percentage, but her employer would not. So the total amount that her employer is going to pay is the $10,570.80. All right, we have a situation here. What if the taxpayer changes jobs during the year? Your textbook talks a lot about this, and this is an important element. So I'm going to just say everything starts over. Everything starts over. And what I mean by that is that each employer is required to withhold Social Security taxes on wages until the employer reaches the base, the limit, with that employer. So it is as if you have not paid any employment taxes for the entire year, even though that's not going to be the case. Then the employee can deduct the excess Social Security taxes from their tax liability. So if you're over contributing because you have multiple jobs and you're exceeding the threshold and they're withholding too much, then you get that as a deduction from your tax liability. So it comes back to you. It just has to be done this way. All right, so self-employment taxes are different. So in this situation, we have the self-employed person who pays both. So I'm going to say pays both the employer and the employee portion of taxes. All right. So the self-employed taxpayers are taxed on the net earnings from self-employment. Okay, so we have to figure out, this is a new term and a term that you need to remember, the net earnings from self-employment, which is the amount of the income from the business, our profit minus our expenses, or it really should say our income minus our expenses, multiplied by 92.35%. Okay, the reasoning behind this is because we're trying to give the taxpayer a benefit here, since the taxpayer is paying both the employer and the employee's portion of the tax. And that's why we right off the bat say, what is net earnings from self-employment? And we use that as the tax base. All right, so the Social Security portion again, 12.4% on the first $128,400 of net in earnings from self-employment. The Medicare portion, again, 2.9%, which just comes from 2 times 1.45. It's both of the employee's share, the employee and the employer's share of that tax. And then we have these different thresholds. We have 3.8% on all net earnings from self-employment in excess of $200,000 for a single person. So again, the rate goes up for high-income taxpayers. Taxpayers are allowed to deduct the employer's portion of self-employment taxes as a 4 AGI deduction. Okay, so we talked about this a little bit before, but we didn't really have a great example of it. The self-employment tax deduction is the employer's portion of Social Security, which is net earnings from self-employment up to $128,400 times 6.2%, plus the Medicare portion. Again, net earnings from self-employment times the employer's 1.45%. All right, so now we have an example with Drew. Drew is self-employed and has net earnings of $180,000. How much does he pay in self-employment taxes? What is his self-employment tax deduction? So these are his earnings. We can just think about this as his profit from the business. The first thing we need to do is take his profit of $180,000 and multiply it by 92.35% to get our net earnings. I'll just write it out. Net earnings from self-employment. Okay, so 180 times the 92.35% gives him $166,230 as the net earnings from self-employment. This is what we use as the tax base. Okay, so for Social Security, we're going to take up to $128,400, and so we've exceeded that. So $128,400 times 12.4%, both the employer and the employee's portion here, and that gives us $15,000 $921.60 as the Social Security component. The Medicare component, again, because net earnings from self-employment does not exceed the threshold of $200,000 for an individual, we don't have to worry about the higher rate. So we can just take the $166,230, because remember, Medicare tax is on the entire amount, not capped at $128,400, and multiply that by 2.9%, which is the 1.45 times 2 for the employee and the employer's portion. So that gives us total Medicare of $4,820.67. The sum of these two are total SE taxes, $20,742.27. All right, the next step is calculating the self-employment tax deduction. Okay, so I'm going to just go over here and say the SE deduction. Okay, so we already know the SE tax is $20,742. The deduction related to Social Security is $128,400 times just the employer's portion, the 6.2%, or $7,960.80, plus the Medicare deduction for the employer, or what would be the employer, since we're thinking about a self-employed individual. We take the net earnings from self-employment, multiply by the 1.45%, and get $2,410.34. And the sum of those two, $10,371.14, is the total SE deduction. That's your 4 AGI deduction that you would get that we have talked about previously. All right, now we're going to pretend for a second that Drew is employed and earns a salary of $70,000. So we have a salary of $70,000. He also owns or operates a successful lawn care business, which produced net earnings of $60,000 this year. Again, that's just the profit. I don't want you to think that they've already calculated net earnings from self-employment. The question that we're trying to answer is, how much does Drew pay in employment and self-employment taxes? What is Drew's self-employment tax deduction? All right, so we're going to go ahead and work through this. The first thing that's going to happen is on the first $128,400 of income, we're thinking about the employer, so we're calculating the employment taxes first. We're talking about the salary component of $70,000. On the first $128,400 of income, there's going to be 6.2% of Social Security and 2.9% of Medicare. Okay, since the employer is legally required to collect these employment taxes, we're going to start here. We'll always start with the employment taxes first. It works in the taxpayer's favor because they end up paying less FICA taxes out of their pocket. So for the employment taxes, we have Social Security, which is $70,000 times 6.2%, which gives us $4,340. We have the Medicare portion, which is $70,000. Again, it's not exceeding the cap, so 1.45%, which gives us $1,015. So the total employment taxes are $5,355. The employer, so I'm going to say the employee is paying that. And then we're going to note, kind of on the side, the employer is also paying this. Okay, so the employer is also paying this as part of their own payroll taxes. We're not going to really see that right now, but that's what's happening. For the SE component, the self-employment component, we first determine the limit on Social Security taxes, the cap minus the salary or wages already taxed. So the cap for Social Security is $128,400 minus the amount that's already been subject to tax, or the $70,000 in wages. that leaves $58,400 in our income before we get to the cap that needs to be subject to to Social Security tax. Okay, that's step one. Next, as step two, we're going to determine the net earnings from self-employment. So we're going to take our $60,000 in self-employed earnings, multiply by 92.35%, and get $55,410. This is our net earnings from self-employment. Number three, or step three, is we take the smaller for Social Security. Okay, so we're taking the smaller of 58.4, which is the amount left before we get to the threshold, or our net earnings from self-employment, and that's what we subject to the Social Security tax. In this case, we're going to use the $55,410. So to get Social Security, we take $55,410 and multiply it by the 12.4%, both the employee and the employer's share, since this is our self-employment income we're talking about. And that is $6,870.84. For the Medicare portion, we don't have the cap, okay? So we wouldn't consider the cap. It would be all of our earnings would be subject to Medicare. In this case, though, it's the same number, $55,410 times 2.9%. Again, we are not over the threshold that gets us into the additional rate. So that gives us $1,606.89 in Medicare taxes. Total SE tax, $8,477.73. Okay, our SE deduction. This is our 4 AGI deduction that we would be calculating. We would take for Social Security the $55,410 and multiplying it by just the employer's share, so 6.2%, $3,435.42. And for Medicare, we have $55,000 again, 410 times just the employer's share, and that gives us $803.45 for a total SE deduction of $4,238.87. And I'll jot down there, that's my SE deduction. Sorry, the handwriting's a little bit sloppy at this point.